Hope you're having a good weekend. So today is the Sunday, so it's time for another market outlook trading video. Now, just a quick recap about this week's performance before I start off the market outlook video. This week we had a very good week. Okay, if you are part of our Telegram channel, you will know that we actually made about 239 pips in profit, as well as 50 points when we traded the NZDUSD. So it's a pretty good week. So I hope you made some good money because it was a very easy week. Okay, if you are a YouTube subscriber and you have not yet joined us on Telegram, please join us because this is where we send out free signals. Okay, we send out a lot of educational content on it. Okay, so nothing too much to talk about this week. Next week is looking like a very good week as well, just like this week. So you definitely want to pay attention to this market outlook video because it's weeks like this where we expect to make a lot of money. Okay, the past few weeks of June, the starting of June to about last week, it's been really difficult to trade, but last week, the week that we just had, was a very good week, and next week is probably going to be a good week, which I'll break down to you shortly as I look at the Forex Factory Economic Calendar. Okay, so let's get into the analysis, or rather let's talk about the Forex Factory Economic Calendar first. So next week is the 28th of June. Okay, we are going to end the month of June and we are going into July. Okay, so probably we will record the trade record for 28th to 2nd of July and call it the end of June, rather than, you know, just stop the trading record halfway during the week. Now, as you can see on the Forex Factory Economic Calendar, next week we have non-farm payroll. Okay, non-farm employment change is basically NFP, and right here, so you have this ADP, which is also high or rather medium impact. So next week, it's going to be a relatively whippy week. Okay, but because it's NFP week, most of the time what happens is that if you trade fake out plays, meaning that if you buy below support and you sell above resistance, okay, and you trade the fake out, normally your probability is going to be very high. It's weeks like this which I expect to have a win rate of like 65%. Okay, so next week, please do not trade breakouts because you have all this kind of NFP, and during NFP weeks, based on my experience, okay, if you've been in our Telegram channel for some time, you'll know that we always say that NFP weeks are where the market always tends to be very whippy, in the sense that you don't want to be trading the breakout, you want to be faking the breakout and trade in the opposite direction of the breakout. Okay, so I hope that is clear. Now, before I go into the charts, which I'll break down the trading bias and the key levels for you, right? As always, if you are new to this channel, let's say you are from our Telegram and you have not yet watched any of our YouTube videos, please go grab this day trading guide, okay? Because in this video, what I'm going to do is I'm going to be looking at the MPE trading strategy. Okay, I'll be using the MPE trading strategy. So I'll be using the market condition, price level, and entry, which I'll break down for you shortly. Okay, so what I'll do is I'll leave a link to this PDF in the description down below. So all you need to do is you just need to click on this link, come over here, input your email address, and I will send it to you. Now, one last thing is that our bonus package that we've arranged for you is going to expire at the end of this month, which is the 30th of June 2359. So if you want lifetime access to our signals, our Forex course, and also, you know, other bonuses over here, please go get registered. Again, the link is in the description down below. Okay, our bonus package will expire on the 30th of June. Okay, we will not make any exceptions. If you come in after 30th June, we will not be able to grant this to you. So please check this out. Basically, it's free. You just need to deposit a minimum of $300 with our sponsoring brokerage, and you get all this totally free. Okay, so let's get into the market outlook analysis video. Now, let's look at DXY. Now, DXY stands for dollar index. So if you've been watching every week, I always say that DXY represents the strength of dollar. So if it's going up, then dollar is going to strengthen. That means euro, dollar, pound dollar, Aussie dollar is going to be weakening. So this is how we use DXY. Now, last week's analysis was like that. Okay, in fact, there's not much changes. So I didn't actually do any changes to these charts, but basically last week I said that I feel that price is a bit high to resistance and we'll probably look for a retracement down lower. True enough, what happened was that price actually retraced down lower, and it didn't really hit this level. But if you were to look at this swing higher and you just plot it, and you know, you see this as a zone of support, then somewhat price is somewhat at support right now. Okay, so this is a very nice pin bar. Okay, but the problem is that there's a pin bar here and there is an doji right here. So let me just clear this so that it's clearer for you. This is a pin bar, but this is like a doji. So the price action is not very confirmed, or rather it's not very clear. Okay, but market condition wise, right, remember, because we're using the MPE, market condition is bullish because you have a high here, low, higher high, higher low, higher high. Okay, so the next thing that we need next is the price level. Okay, so price is at support right now. Now the last thing that we need is that we need an entry trigger, which is a candlestick pattern. It could be a hammer, it could be a bullish engulfing. So in this case right here, I'm not too convinced that this is very bullish yet. Okay, but if you want to take this trade and say that this is a pin bar, then I think the risk to reward still makes sense, right? Because remember, you are trading with the trend, so your risk honestly is not that high, and you still get a decent risk to reward of 1:1.56. So if let's say you were to buy on Monday when the market opens and you target this level, okay, I think it's still okay trade. It's not the best because of this. Alternatively, what you could do is you could wait for a nicer candlestick pattern right here, maybe another engulfing pattern, and then you enter the trade. Okay, but bullish bias for DXY. Okay, I'm expecting dollar to be bullish. Okay, so let's look at euro dollar and see what we can do next week. Now, this is euro dollar. Market condition is bearish. No change in the market again. There's not much change to the analysis that I done last week because you still have the low here. High, lower, lower high, lower low. Market condition is bearish. Now, I'm just waiting for price to retrace a bit higher. Okay, in fact, this is a shooting star, which is pretty nasty because I think if people they went short on this candle and they put their stop loss above, then they're probably going to get wiped out, right? Their stop losses are going to get triggered. Now, I expect price to retrace a bit higher, maybe do one more rinse, okay, to stop out people who shorted here and put their stop loss above, okay, because you can see that this is a very strong level, and as of this time, price hasn't really hit this level, okay, but of course, if let's say you were to see this as a zone of resistance, then yes, price is at resistance, okay, but personally, I prefer to just wait for price to pump a bit higher, okay, see if you can hit this, because this is the recent data. This is more recent than this. So if I were to choose between this level and this level, I would say that this level is more reliable, so I just prefer to wait for price to come up here. Okay, look for a candlestick pattern and then you short it down towards here, and if this level is broken, then of course we can expect price to come here. Okay, so very straightforward, just be patient. The market trend is clearly bearish, but you need to be patient so that you get in at the right price level and you get in, when the trend is just about to continue, okay, because this is a retracement up. Now let's move on to pound dollar. Pound dollar is spot on, okay, spot on with what we said last week. Okay, if you watched last week's market outlook video, what I say was that this is a potential head and shoulder pattern, left shoulder, head and right shoulder, and I was saying that price was retracing, or rather this is support and price may retrace towards this resistance. Okay, so this is Friday, this is Thursday, Wednesday, Tuesday, Monday. So on Monday, price just started rallying straight up. Okay, so this support level was spot on. Okay, I was spot on in identifying that this is a strong level, okay, because this is a swing low here, this right here, and over here somewhat like a support. Price is resisted now. Okay, this would have been a very good trade if you entered on Thursday, let's say when the market closed. This candle close, sorry, not market close, but when this candle close, you enter something like this. Okay, maybe not because the risk to reward wasn't that good, but anyway, this was a good candlestick pattern that showed that this level is holding. Okay, right now price is in the middle of nowhere, right? It's in the middle of this support and this resistance. So for this reason, please do not chase the trade, okay? Please be patient. Ideally, if we could get a retracement higher, look for a candlestick pattern, try to short it here and then short it down. If you were to enter right here, then you're actually chasing the trade and your risk to reward is not going to be good. So please be patient. The levels are holding. Okay, this level is valid, this level is valid, and of course if this level is broken, then we have this recent swing low right here. Okay, so just be patient. I cannot give you any potential setups right now in terms of actual tradable setups because the market hasn't retraced to this level. Okay, I mean it did on Thursday, but by the time the confirmation came in, it's already quite low. Okay, and if you are looking at this today, which is a Sunday, price is already very low, so do not chase this. Now let's move on to dollar franc. Okay, dollar franc market condition is bullish. Okay, last week I said that this is bullish because you have the first bottom here, the second bottom, this is the neckline, double bottom pattern is broken. So a double bottom signifies that the market is reversing to the upside. Now this three big bullish engulfing bars, or rather extended range bars, show that the trend is up. Okay, even if you don't see this double bottom, right, let's say you're not that experienced, you can see that these three big candles shows you that there's a lot of strength in the bulls. Okay, so right here, price is actually bouncing off support. I believe this was the level that I drew last week. I can't really recall, but anyway, this is a strong level, so let me show you why this is a strong level. Okay, let's just switch to the line chart, and you can see that this was the support that turned into resistance. Okay, in fact, here was also a resistance. So right now, price is parked at support, market condition is bullish, price level is here. The last thing that we need is an entry trigger. Okay, remember we are sticking to the MPE trading strategy, right? So we need an entry trigger, which happens, or rather hasn't actually happened, right? Because this is not a very convincing pin bar. Okay, so ideally if Monday we can have an engulfing pattern right here, then potentially we could look for a setup because price is very close to support. Now price may actually just spike down lower because the support is actually here, and you know it kind of missed the support by a bit. So price might actually spike down lower first before going up. Now just be very careful that the resistance level is very close. So if let's say we do get an engulfing pattern that closes somewhere here, let's say something like this, then please do not chase the trade, because by then if you get in late, your risk to reward is not going to be very attractive. Okay, so please be very patient, wait for price to retrace lower, do not chase the trade if you do not get a good risk to reward. Okay, remember next week is NFP, so NFP we do expect the market to be to do a lot of fake outs, meaning that it will pretend to break the support or pretend to break the resistance and eventually unbreak it. Okay, so a breakout, or rather a fake out, if you're if you're not that familiar, it's something like, let's say this is support. What price will do is it'll break below, okay, and then after that it will break back above. So people who trade this breakout are going to get whipped out. Okay, so this is what a fake out is. So just be mindful that next week is a fake out week. Okay, it's not a breakout week where you follow the trend. Okay, you're going to be whipped out if you trade with the breakout. Now moving on to Aussie dollar. Okay, Aussie dollar, exactly like what I said last week. Okay, there's actually no change to the charts. I didn't actually update the chart because it's exactly what I said. I said that price was going to retrace higher, okay, likely because we're in the middle of nowhere, and this entire zone is a resistance. Okay, now on Friday we have this a shooting star. Okay, again, it's a bit harder to trade because this is an entire zone of resistance, and the issue is that I do not know which, where it is actually going to reverse. Will it start reversing down here, or will it reverse down here or here? So it's very difficult to tell. But one thing to know is that the market condition is clearly bearish. Okay, you have the low here, you have the high, lower low, lower high, lower low. Market condition is bearish. Okay, right here is the entire zone of resistance. Okay, so this one is a bit harder to trade. What I recommend that you do if you really want to trade the Aussie dollar is you will probably need to go to the lower time frame to watch the price action, look for a break in a trend line. Okay, maybe something like this. Okay, break in a trend line, or you look for a series of lower lows and lower highs to confirm that the trend in the lower time frame has already changed before you actually take the trade. Because this one right here, the resistance zone is very big. I do not know if it will start turning down here or it will go up higher and turn down. Okay, again, I will send out these signals, or rather my team who monitors the market will send out these signals in the Telegram channel, right? This is what we do. Week in and week out, right? We tell you what to buy, where's the stop loss, where's the take profit. So if you have not already joined us, please join us on Telegram. Okay, you are really missing out a lot if you do not join us on Telegram. Okay, it's totally free, links in the description. Okay, so if let's say this resistance hold, then of course we are looking at this next level of support right here, which is a swing high. Okay, so just take note. Now Kiwi dollar. Kiwi dollar, same thing as Aussie dollar, started rebounding again. This chart that you see right here was the same chart that I did last week. Okay, there's no change. I didn't change it, anything. So you can see that the analysis for last week was spot on. Okay, it's spot on. So definitely, it's very important that you watch this video every single week if you are not watching already, right? Take note of the key levels, okay, right? At the same time, right, I really appreciate if you would hit the thumbs up button if you gain value from this kind of videos, right? Because I'm burning my weekend on a Sunday, right, just to record this video, just to make sure that you do not sell into support or, you know, buy into resistance. So really appreciate if you could just hit the thumbs up button and hit the subscribe button if you are new. Now, price is retracing higher right here. This is entire zone of resistance, and price, let me see, price kind of like spike it, but personally I'm not convinced that price has actually hit the entire zone. So I want to wait for price to just go a bit higher up, look for a candlestick pattern. Okay, remember our market bias for this on market condition is bearish because we have a low here, we have a high here, and we have a lower low. So of course we expect it to be bearish, and we want to sell at resistance right here. Okay, again, this is all covered in the MPE trading strategy. If the market is in a downtrend, you should be looking to sell. Very straightforward. Okay, just wait for a candlestick pattern here. If this holds as resistance, then look at the recent low here as a support. And if this is broken, then we can look at this recent swing high right here. Okay. Dollar CAD. Dollar CAD is a bit trickier. Okay, so dollar CAD is quite similar to dollar franc. So we have a double bottom here that you can see if I were to switch to the line chart. This is the first bottom, second bottom, neckline was broken. Okay, so market condition wise is bullish, and you can see this big upward thrust, this big upward thrust here. Okay, now price is actually doing a retracement, and right now it's at support. This level is a bit hard to get. Okay, it's not the strongest level, but if you don't have this level, then the next level is probably over here already, somewhere here near the double bottom neckline. Okay, but I do think that this is a very strong uptrend, okay, as you can see from the movement, and I do think that this point right here, okay, if I switch to the line chart, okay, maybe if I will just switch it up a bit somewhere here, okay, and switch it back, then price is at support right now, but I don't think that this is the strongest level. Okay, in fact, actually if you were to scroll back, you can see that this level here is actually a form of support in the past, but still this is quite far back. This is in 2018. Okay, so it's like 3 years back. So I don't really think that this will be the best level, but nonetheless it is still a valid level. Okay, so of course if I see a candlestick pattern here, then I might go ahead and take the trade, depending on the risk to reward. If the risk to reward makes sense, then I can think about taking the trade. But for now, we don't have the candlestick. So let's say if we are able to get in something like this, okay, maybe a nice tight stop loss. Okay, probably not. Okay, really depends on how the candle close. But as of right now, it doesn't look like there's enough space. There's not enough meat, right? Because this level is quite close, and depending on how tight your stop loss is, it may not make sense. Okay, if you cannot get 1:1.5, meaning if let's say you risk 50 pips and you cannot get 75 pips in profit, then you probably are better off not trading this. Okay, so just be patient about this. Again, I will send this out in the Telegram channel if I see any of these setups. Dollar franc, sorry, dollar franc, it's over. Now let's look at dollar yen. Sorry about that, dollar yen, not dollar franc. Now this one market condition is uptrend, very clear. High, low, high, 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 low, high, high, higher, low. Okay, in fact, last week it moved exactly like what I said. I said, okay, price could potentially retrace lower, but I said that if, you know, it retrace lower here and it forms a bar, you'll probably be very close to resistance and there's not much space. So let me just clear this up first so that's clearer for you. So right now price has already closed above this, and it's struggling to close above this level, or rather, you know, it closed above and it seems right now like it wants to close back below. So right now it's very hard to say whether price will come back lower. Okay, so I would say that I wouldn't recommend buying on this level because this level doesn't look like it's going to hold. So personally, if I have to make a guess, I would prefer to wait for price to retrace back lower since it's been going up, down, up, down, up, down. So I do expect it to go up, come down. Okay, so wait for price to retrace to this trend line. Okay, then look for a candlestick pattern and then you can buy it up. Okay, and then you target probably the swing high right here. Okay, that would be a better setup than to trade on this breakout. Okay, remember next week it's NFP, so you don't want to trade the breakout, you want to trade the fake out. So ideally, if price can close below this level and then go back above, then that's a fake out of this support level. Okay, so remember just now I mentioned that a fake out is really like this, right? Close below and then close above. So in this case, it's actually right here. If it can do this, close below this support and then close back above, then it will be a fake out of this key level right here, okay, which is actually a recent swing high. So that's what I expect the market to do. Now let's look at gold. Gold, it's bearish, market condition bearish because you have like a high, low, lower high, lower low. Okay, in fact, this is like in a sense like a double top, you can say it, somewhat like double top, and it's broken. So market condition is bearish. The only problem is that price is at support right now. So this level right here, 1762, you can see that this is support, this is support, this is support. Okay, and in fact, if you were to draw this as well, there's a lower support right here. So really, this is a zone of support. So market condition is bearish, but we're at support. So I do expect price to consolidate after a big movement. This is a very big movement down. So I expect price to be very whippy, up, down, up, down, up, down here until it comes here. And then when it comes here, then it starts selling down. Okay, so next week, we probably will not get any trades in gold because after this big movement, price needs to consolidate. So just be very patient. Maybe 2 weeks later, 3 weeks later, then we probably get a trade in gold. But for now, I do see it as a consolidation and retracement up to this level to short it down. Euro pound. Euro pound is still one big mess. Okay, this entire mess, it's very messy. You can see it's up, down, up, down, up, down, down. It's going nowhere. Market condition is still bearish because this is a high, this is a low, lower high, lower low. We have a descending trend line. However, we can see that price is still being supported at this left shoulder. Okay, this is like a left shoulder. This is like a head, and this is the right shoulder. Okay, so price is still at the supported rather. Okay, supported, but it's also resisted. So I do think that this is a very narrow range, so I don't recommend trading it. Okay, because even if you were to sell it here, you do have to take your profits very quickly. And if you are buying here, you do have to take your profits right here. So it's a very, very narrow range. Okay, of course, if you trade the H4, which we do, okay, I think last week we sent out some signals on Euro Pound. Okay, we went long and we took some profits. I believe it's on Friday. Okay, we took some trades. We got out quickly because price is at resistance. So if you want to trade this, you probably need to trade the lower time frame and you need to be more experienced. But if you want to use the day trading guide, the MP trading strategy, then I don't recommend that you trade this pair because the range is just very narrow and there's not much space. Okay, so just take note of this trend line and this support right here. Now NZDUSD 100, and then I'll end off with pound yen. Okay, NZDUSD 100 is a very clear uptrend. So previously I said that this level it doesn't know whether it's broken or not, and then this level just to be safe, I wanted to see price close above. True enough, we got this entire candle closing above everything, right? This candle right here closed above this high and this high, which is very good. So price is in a clear uptrend. Market condition is definitely bullish because you have a high, low, higher high, higher low, higher high, higher low, higher high. Okay, so right now price is a bit high. So what you should do is you should wait for price to just retrace to this zone of support, look for a candlestick pattern, and then buy up. Okay, these are the kind of trades that you should be taking because it's very clear cut. It's very straightforward. The trend is clearly up. You have a clear level, a clear support zone. You just need to be patient and wait for price to retrace down here and look for a candlestick pattern. Okay, this is a setup that I recommend that you focus on and trade next week. Okay, especially if you are a beginner. Now, pound yen, the last currency pair before I end off this video. Okay, so pound yen market condition, last week I said it's a bit tricky because the long-term picture is up. You have a high, low, higher high, higher low. Okay, but if you were to look at the intermediate trend, which is somewhere over here, you can see that this is a low, high, lower low, lower high, lower low, right? And price hasn't violated this recent swing high right here. Okay, so it's a bit subjective, which is why last week I said do not really trade this if you're not clear, okay, if you're not very sure what to do or you're a beginner. But I did mention that this trend line will be a strong level, which true enough, it really spiked. Okay, it spiked it almost exactly, okay, almost exactly to the level. In fact, I would say exactly. It hit here and then after that it started retracing. So right now price is at resistance. Okay, I do expect price to retrace lower, something like this, and then after that bounce back up. So if you really want to trade this, then look at the trend line to buy. Okay, look for price to retrace down here, and it will be in confluence with this support level that I've previously drawn. Okay, let me just clear this so that's clearer. Okay, so if you just wait right here, okay, at 152, which is also a round digit, you will have the confluence of the trend line, the horizontal support and resistance level, and the psychological level of 152.00. Okay, so I do think that this will be a good setup if we get it. Of course, we might not get it. It really depends on the market. Okay, so that's it for this week's market outlook video, right? Just a gentle reminder that next week we have NFP, so it's going to be a whippy week where we probably want to trade the fake out. Okay, it's not going to be difficult to trade because most of the time the whippiness it's fast, meaning that you can actually make money if you trade a fake out, right? Price goes above the resistance level, breaks above, it will come back down very fast. So you still can make quite good money next week, right? Especially if you follow our signals, because generally we do quite well during the NFP week. So make sure you join us on Telegram. Okay, last thing before I end off this video is please go claim the bonus package if you have not already done so. Today is the 27th of June, okay, and this bonus package is going to expire on the end of June, okay, end of June, which is the 30th of June, 2359 GMT +8. Okay, please do not let us know that says different time zone, because we already tell you that we are based in GMT +8, which means that once 2359 passes, we will not grant this bonus package to any other newcomers or people who decide to take this package. Okay, again, full details of this package, of what you get, right, it's found in the description down below, so please go check this out, right? It's totally free. It doesn't cost you any money. You just need to deposit $300 with our deposit with our sponsoring brokerage, okay, and you get all this totally for free. Okay, if not, thanks for watching, right? Please trade safe, please manage your risk, and I'll see you in the Telegram channel.